I think the first place that anyone could start would just be looking at traditional momentum or trend following methods. And it seems like they work pretty well on most time frames. So crypto is a very momentum driven market. And so typically what happens is that buying begets more buying. And as people are noticing that prices are increasing, that typically attracts attention, causing more people to buy, and um, that phenomenon can persist for a while. And then typically you'll reach some point where valuations get stretched, or people are usually you just see a crazy run up, and then people tend to do the same in reverse, where once people start selling, that selling begets more selling, because now people who had ridiculous profits are locking them in, and so that kind of tumbles back down the other direction. So I think momentum, first of all, would be your main edge. Or I mean, it could be an edge. It's just something that seems to have worked well for as long as I've been involved in the markets.